Gone are the days when the purpose of the central bank was financial sector stabilization alone and overall macroeconomics. According to the new deputy central bank governor, monetary policy has got to be very mindful of the social aspects as the future and even the role of central banks evolves.
For example, fintech and the technology. How do we harness that to ensure that we promote financial inclusion? How do we promote digitalization of our economies? How do we deal with climate change and green financing? Because all these have got implications for the stability of the financial sector. You also know that this COVID-19 has increased inequality across the board. So what policies should the central bank adopt going forward to reduce on these inequalities that have been imposed on it by COVID-19?
As things are now, those concerns may not be seen as directly linking to macroeconomic management. According to the Deputy Governor, other variables are also changing as occasioned by technology that challenge the relevance of central banks globally.
Then there's the issue of the future of work, right? Particularly for the financial sector. And in the context of the fourth industrial revolution, you've heard of things like artificial intelligence, machine learning, big data analytics. This is where the central banks are going if they have got to improve on their relevance and effectiveness. So the challenge then for us, which we think we have the capacity to deal with, is how do we put in place dynamic frameworks that can handle all these evolving challenges. So it needs a thought leadership. It needs working with all the key stakeholders to address these issues going forward.
This is a direct answer to the lamentation that has now become old, that regulators like central banks are always playing catch up and also doing a poor job of it. Samuel Setumba, NTV Business.